we're going to talk about pipelines. And we've got a, all right, okay, let's see. Ooh, oops. Close.
It's back.
Right. Okay. This is the order I called them up in. Marriott, Hilton, AccorHotels, and Radisson. And we're going to talk about their pipeline. This is where it currently stands in number of rooms and how much of that is actually on-site construction. Because I'm going to be making the point that this whole pipeline thing is all very well, but it represents signed agreements. Now, those public companies here are all about returns to shareholders, and they need rooms open to get that. Okay, so we're going to dig into this a bit. So you've got the largest pipeline, Karim. Are you satisfied with where you're sitting as the largest hotel company in the world with over 1 million rooms, 1.2 million rooms, something like that?
Yep.
Worldwide, you've got 18,000 rooms in the pipeline for Africa. Is that okay?
Yep. It's okay.
But Africa's 54 countries, it's about a third of the world.
I think we all know that Africa today is underdeveloped in terms of quality hotel supply. And this pipeline is, at first, is just a statement from investors who are keen to develop the hospitality and the tourism sector. It's also keenness of all the operators, such as Marriott. You have to be in the game, you have to be present. We have 31 brands and that cater to different type of demand and travelers. And I think this is very healthy pipeline.
You bought a lot of that pipeline, didn't you?
The pipeline, no, was not bought.
You bought Starwood, which had
Yeah.
quite a very large pipeline
Correct.
in Africa.
Yeah, I would like to make a statement. So what you see here on the figures, we have a classification inactive, which you can call them signed, but will never happen. But the 17,000, which I would say is 16 plus today, they are mainly active pipeline, under planning or under construction.
Okay, what's your target for that number?
Target, annual target, you mean, or?
Surely Marriott must have a target for the pipeline in Africa.
Yearly target, right?
You're going to tell us?
It's around 4,000 keys.
Sorry?
Approximately 4,000 keys a year.
Okay, quite a lot. Okay, Mike, you're next. 11,528 rooms. This is a beginning of the year, so some of the data that Chris was talking about might be slightly different because they've been signing deals. So this is from the beginning of the year. 55% are on site. Tell us about your pipeline, 11,000 rooms.
Okay, that was the start of the year. 55% under construction, slightly less than across EMEA, which is around 63, 65%. That has increased slightly because several starts this year. But I think the exciting part about this year is we've actually opened 6 hotels, including 2 fantastic properties here in Nairobi, the DoubleTree by Hilton in Hurlingham and the Hilton Garden Inn at Nairobi Airport, which was the first Hilton Garden Inn in Sub-Saharan Africa. And we're opening 2 more, our entry into the Congo and our entry into Botswana. So that would be 8 hotels that we've opened this year. And if you put that into perspective, the previous 8 were opened over a 5-year period. So it's real demonstration that our pipeline is really being realized.
It's happening.
It's happening, yes.
Fantastic.
And
Okay.
looking forward, we see that similar ongoing rate, so that, you know, we are very confident we're going to double our current portfolio in the next 5 years.
Okay. All right, I'm going to take you in order for now. Alexis, 10,000 rooms, but of that only 1/3 are on site. Now that could be because they're not happening, or it could be because they're quite new deals. Which is it? Talk about your pipeline.
No, I mean, I presume it's a mix. It's a mix of both. I mean, this is maybe one general comment I would like to do, you know, on pipeline, because a lot of operators are actually disclosing their pipelines and being proud of their pipelines. But I think what we're working on and what we, of course, as AccorHotel, we want to achieve is try to make sure that these 10,059 rooms in the pipeline are actually still not here in the pipeline in a few years, and that make sure that actually there is, we're not like sustaining pipeline in Africa. So I think we're trying to work, of course, towards being selective into the projects we sign, and trying to work really upfront with the partners to make sure that we find the right partner. It's often what we call thoughtful development, is trying to make sure that we're going in the right direction, and we're going to be able to sign a project that will happen. You were mentioning, of course, some of this pipeline being quite new. I think it's, Accor is lucky enough to, still be the number one operator in Africa, and that's including the Mövenpick numbers with 26,500 keys. The reality is that our footprint has always been deeply in North Africa. We're working very strongly in rebalancing our presence towards Sub-Saharan Africa, and mainly towards English speaking of Africa. So I think, as you said, there's a lot of this pipe that is new, because we're building presence in this key market where we were definitely lacking exposure. Nigeria is one. We've signed two deals in ECOEM, Gallery and Pullman earlier this year in June. Accra is another one, where we've signed yesterday a fantastic Pullman Living, 350 keys near the airport. And I would say we're in Nairobi, so I'm going to talk about Nairobi. Nairobi, I think, is also one of the key markets where we want to increase presence, and I think that so far, of course, acquisitions have helped, and I'll be happy to come back on that. But I think we're going to be. I don't have all the numbers in mind, but today in Nairobi, it's a market where we had no presence just a few years ago, and today in Nairobi we have 777 keys. Our Pullman is going to open shortly. We're going to have more than 1,000 keys. So I think it's not bad for someone that has been a latecomer into the market.
Okay, thanks, Alexis. And finally, last but not least, because Andrew was the first, I think, an international hotel developer actually based in Africa when Radisson set their office up in Cape Town, or Carlson Residence. But you're coming last, but I'll quickly say, before you say it, that in terms of brands, the Radisson Blu is one of the top brands in terms of pipeline. But in terms of total pipeline, Andrew, you're lagging a bit, aren't you?
I would disagree with that.
Why? That's not fair.
So,
Karim.
so in the last 4 years, we've doubled our size of our portfolios. We've opened more than 30 hotels.
You've opened a lot, haven't you?
And we've opened 3 hotels this year, and so we've been consistently being able to deliver our pipeline. So it's quite important for us. What we sign, we want to be able to open in a relatively quick period of time, and we've been successful at doing that. So today, if we look at our portfolio, we're actually 50% of our portfolio is open, and 50% is under development. And of the hotels under development, 62%, even more than that, is actually physically on site.
62% is actually under construction, which is brilliant. Yeah.
So for us, we've got a really good team. We've been very focused on, as I say, delivering on our pipeline. We don't have as many brands as everybody else, but 2018 has been an exciting year for the company. We've had a lot of exciting changes to the company, new brands being introduced to Africa, so we'll be able to compete in more segments of the market. A new name of the parent company, so people know who we are. So we were the Carlson Residence Hotel Group. Now we're Radisson, who people used to call us that anyway. We've got a big new 5-year development sort of strategy. We want to add another 50 hotels to the African continent, so take our portfolio up to 23,000 rooms within a 5-year period. We've got the correct resources in place to make sure that we're not just signing, that we actually are continuing to deliver on our pipeline.
Okay. Andrew mentioned brands. These are the brands that are actually operational or under in the development pipeline. and they almost follow that same order that we saw there. But Marriott, I count 18 brands that you have present here or you're developing. Accor, I think the figure there is 14, Hilton 5, Radisson, yes, as you say, you've got fewer brands, you've only got 4 brands.
And 5.
Where did the other one come from?
We signed a red 2 days ago, so we've got to adjust that slide. So we've got all 5 brands, all active.
Isn't Radisson Red on there?
No, because
well done.
The one we signed, we had opened.
Radisson Red, okay, well done. So we've got a lot of brands there. So I'm not going to talk about the brand confusion. I'm going to keep on about this quality of the pipeline, if you like, because you guys, you're the deal makers. You're chasing deals, and of course that's part of the process, that you've got to get a deal signed before you can manage the hotel, before it can get returns for your shareholders and for the investors. But what I want to dig into here is that apart from your technical services, which is basically to do with design and fire life safety and that sort of thing, what can a management company do to get that hotel open? The ones that you've signed the deal for, what can you actually do to get a hotel open? Alexis?
Well, I mean, in the continuity of what I've said before, I think making sure ahead of the signing and making sure that the project that is being contemplated will be able to get delivered and not just being signing just for the purpose of being signing.
So there's no truth in the suggestion that you as deal makers just keep signing deals because that meets your target.
We're not. Of course, I mean, Accor wants to be big and wants.
You need the numbers.
Leadership, and we want, of course, in the end, to the numbers to be there. But we're also trying, we often say, and I'm quoting Philippe Barthaud, who was heading development before me, who was often saying, Accor, we want to be big, we don't want to be fat. And the reality is that I think what's behind that is that we want to be big, but we also want to, create value for partners, create value for stakeholders.
Sure.
So to answer your question, we can sign. And there's a ways to identify issues and problems on the potential project, and that's something you can do before signing or after signing. And our philosophy is, of course, try to identify as much as possible when we believe the partnership might not work, and make sure that there's visibility on the execution.
Trevor, there's no point growing if you can't support that growth.
Absolutely.
Not only have we reinforced our development resources to really drive a regional presence, we've got 4 development offices now in Africa, but we've reinforced our technical support teams. So we've got presence in Africa with engineering support, with architectural support, with interior design support, with IT, and the full operational platform. As Chris said, we've been in Africa a long time, but we're now growing that to support this growth, both from a management and a franchise perspective. Mm-hmm. And it's critical you have that resource in country.
Well, I think to answer your question, fundamentally, we don't want to put a square peg into a round hole. So we're not signing deals for the sake of signing deals. We want to have quality hotels that provide good return on investment for owners. So for us, to answer your question, we've got to make sure we have the right brand in the right location at the right price. Price as in from a build cost point of view. We've paid a lot of school fees over the last year, so we're the last guys to come to Africa. If I take the age of our operation in Africa, we're only 18, so we're a teenager. Some of the guys on stage are grandpas, 60 years in Africa. We're young and energetic. We've learned a lot of lessons, and we need to make sure that the owner picks the right team, has the correct funding structure. We're very involved in having a look at his funding structure, make sure he doesn't have too much debt in his structure, pick the correct team, have the right contractor, have the right contract. So you try and have a turnkey sort of contract, a silver book contract in place. If there's funding shortfalls, we've got vehicles to actually assist in funding shortfalls. In the 18 years we've been present in Africa, we've invested more than $50 million into hotels that we manage in Africa. Initially on a mezz debt sort of structure, that's moved more to an equity structure now. So we will work hand in hand with that owner to make sure he crosses the line and can get that hotel open on time and in budget, and make sure that the structure is not too big. Every square meter costs money, so let's make sure that we build the right square meters in the right part of the hotel for that market.
Mike, you're bringing money as well, aren't you?
So let's talk about two objectives. The first one, I think our mission is, from operation point of view, is at least to drive the RevPAR growth by 5 to 6% on an annual basis, and then also drive our additional hotels to the system by about 5-6%. Okay, so that's a mission, and the mission in Africa is mainly to bring quality supply to some destinations, and we are really proud of putting a benchmark of quality to some cities. We are not collecting hotels or rooms to meet a target. Yes, some people say Marriott are difficult. I mean, we do screening on owners, corruption, FCPA, sanctions. We choose the owners first, we choose the location, the hotel after, right?
How do you choose your owners?
Financial capabilities, compliance, all the FCPA issues, as you know, in Africa and worldwide, and people who will deliver, people who understand, and even we can educate them, help them choose the right brand as well. We are not just collecting any hotel and then under construction, go and sign the deal, or, you know, sometimes the deal will not work. Sometimes we tell the owner, sorry, we walk away, we will not achieve return on investment, you know? And we are proud of that. It's, you ask a question about the target is something, but really the main target for us is to put quality supply in each city. I give an example, Nairobi, since you are here. We have the JW Marriott, 366 keys. Looking forward to see it opening. It's a landmark building, I think, for Nairobi. The 4-Point Airport recently opened. Yesterday we signed the Sankara. The Sankara, it's another statement also. It's a leading hotel in Nairobi. They felt the need of connecting themselves to a strong platform of distribution such as Marriott, given the competition that is entering the market. So it's more doing the right project, the right deal with the right owner and the right destination, more than just signing papers and...
That sounds very selective, doesn't it?
Correct. We have to answer your question on what you provide, like services apart from TSA, right? So we have a full team, full army, legal team. We have the chief legal counsel here sitting. I mean, we are not just transactors on the street to sign this project. The ANC and the TSA cost is high, but we have about 30 plus people involved from multiple disciplines in each project. So it's really, we accompany the owners through the journey, advise, design, and putting the right product for long term. It's not a project for 5 or 6 years, but a project that will be always competitive. Even after Marriott one day, it will remain the right hotel built for the right purpose.
You keep saying the right owner, the right project. Andrew, how selective can you be? You have one of the largest footprints in Africa. Radisson Blue is one of the largest brands in terms of pipeline. But, okay, financial capability is one thing. No money, no project. But how selective can you be in terms of signing a deal with someone that you can be pretty sure is going to make it happen? Because that's what this panel's all about, is actually getting it to open.
Yeah, so I think we have a strategy as to where we would like to be in Africa. So we have very clear cities where we want to have a presence in Africa. We're fortunate with the momentum we've created over the last number of years, and with more and more hotels opening and more sort of shop fronts, we're finding that we have more people approaching us with opportunities than us actually going out and having to look under every stone to try and get a deal going. So we're in a process now where we're really screening opportunities, seeing if the city matches our development strategy, then the location, then the brand, and then you start going into the due diligence of the owner. We're naive to think that we're the only guy in the race looking at that opportunity. So we've got to very, very quickly demonstrate our commitments, our knowledge, and our speed to allow that owner to decide that he prefers to have a more detailed discussion with us. And then we go through the due diligence, from a financial due diligence, from a know your customer, really trying to understand what his background is, his core business. In Africa, 85% of our owners are actually African owners from the country where the hotel is located. So that's somebody who understands the local market, understands the local nuances to its country, and wants to diversify into hotels. He might not have. He often doesn't have much knowledge about hotels. He doesn't necessarily have any knowledge about project development. So then it's very, very important for us to make sure that we select the correct professional team for that owner, to make sure that he has the highest success rate possible to actually deliver that hotel on time. So if he's an owner who is a net wealth private individual and a trader, we might actually bring in a property developer in addition to a construction company to assist him in actually putting his package into a bankable document, so that he has the highest possible success of actually achieving that. And each owner is different, each location is different. So there's a lot of work that happens prior to us physically executing that deal. So by the time we take a project internally to our management for approval, we've probably been working on the project for a year. We've got a very good understanding. There's been quite a lot of commitment between the owner, ourselves, and key professionals that we bring in. We've obviously been fortunate over a period of time that we've got teams of professionals that know us, know our brands, and we can take the learnings and the success from one project and roll it on to another. And that's how you spending time with the owner. That's where you're getting to gauge what type of owner he is, and how we're going to have to service him during the construction period. And then obviously post-construction, you go through a honeymoon period. It's very exciting to building a new hotel. You go through an emotional curve where we all aim up here. We start designing all sort of things. The QS comes in and halves our emotions. We come back down here. We're into reality. The hotel opens. There's a ramp-up phase. So we as developers, we're not signing and walking away. We're involved with our owner all the way to the day the hotel opens, and often for 2-3 years post-opening as well.
Okay, thank you.
And
Mike, you're actually bringing money to the table to make it happen, aren't you, Hilton?
I mean, this is all so important for Africa. You know, being an emerging market, we deal with a high percentage of first-time owners. Not to say that that's wrong.
There's very few multiple
reality,
owners, are there?
but that's the opportunity. So we do all of what Andrew said, you know, and more, because that's what's needed. We've talked about the pipeline and what's needed to get it open, but let's not forget there's so much more once it's open. And supporting that growth from an operational, from a commercial perspective, to make those hotels successful is critical.
Tell us about your fund, how much that's influencing your pipeline.
We've signed 4 contracts with the conversion fund, the Hilton Africa Growth Fund. The first one being the DoubleTree in Nairobi here. And we continue to see a lot of conversion opportunities. They're not easy. I mean, independent hotels in Africa, you know, need a substantial amount of fire and life safety and MEP investments. But it's a part of our strategy that we're focused on.
Okay. All right. Just
Trevor, maybe if I can just add a word on that. I mean, talking about selection process. I mean, at no point we've talking about the owner, and I think there's also an important criteria that we have, you know, within Accor, and I try to follow as often as I can, is what value are we going to bring to the owner? Because the reality is that I will never pursue a transaction if I'm not convinced that we can bring value to an owner, which is not, you know, always the case. And I think it's also important when building relationship with owners to be, you know, not to be over promising, and I think that's really one of the bases of creating trust and avoid, you know, potential disappointments. So. Okay.
No, thanks a lot. Just moving on now to brands. We've been talking about what the corporate entity is doing. Looking at brands, and these are the top 10 brands. I hope you can see that. The purple brand, the purple bar is the number of pipeline rooms for the Hilton brand, okay, for example, on the left-hand side. And then the blue band is the average size of hotels. So this brings in some interesting comments here that the Hilton brand, the core Hilton brand, has the largest pipeline, and excluding 2 or 3, they're big hotels as well. They're quite big boxes. And then we look at Fairmont and Swissôtel, and they're the two that literally stick out, the blue bands for the Fairmont and Swissôtel brands, which are huge boxes, mainly up in North Africa, which you inherited or took over as part of the FIHA deal in Accor. But the other thing that stuck out here was that really for you, Accor, the brands that you've got in that 10 are Fairmont and Swissôtel. Where are your traditional brands, Ibis, Novotel?
I'm actually surprised about these 2 brands being put forward, certainly linked to the presence in North Africa. I think, the reason why, Accor has, today I think 30 brands. In Africa, we've got 15 brands. I believe it's a strength because I think
those are the Accor brands that we're talking
exactly about. that are existing currently in Africa. I believe it's a strength because we can really answer specifically each project and each market needs. As far as Sub-Saharan Africa, because I think that's we're in Nairobi and I think that's where the focus is. Definitely as part of a strategy for most key destination and again, that's an important point. Accor strategy is not to be present everywhere in Africa. We want to be, we want to have density and a tangible presence in some key destinations like Nairobi, like Accra, like Abidjan. And our strategy, of course, is when we enter a market is to try to have rollout across market segments. So it will be with IB styles on the economy segment, it will be with Novotel Mercure on the mid-scale segment. And it's going to be on the upscale segment today with Mövenpick and Pullman, and that's really the brand we're putting forward, and that's the brand I would have expected actually to see as being our core brands as far as Sub-Saharan Africa is concerned. Yeah.
Okay, Andrew. Park Inn, your mid-scale, upper mid-scale brand. How are you doing with it? It's not in the top 10 yet.
It's not in the top 10 because there's too many brands in Africa. I'm joking. There's 111 brands in Africa. I think Park Inn by Radisson is probably in the top 20 as a brand in our portfolio. It consists of almost 25% of our African portfolio. It's a brand that we don't necessarily see going to every city that we operate in Africa, and that's primarily because of the infrastructure in certain countries. Park Inn by Radisson being a mid-scale brand, it needs to be in a city where you're able to outsource certain functions. Your back of house needs to be a lot smaller to make it economically viable. So it does mean that the brand can't go into as many markets as a Radisson Blu can. Radisson Blu typically can go into, it can be the first mover in a new country, in a new city where there isn't much local infrastructure, and you have to build a bigger back of house facility. So that's really why at the moment
the business model is flawed.
It's flawed. So if you take, we announced a hotel deal 2 days ago in Niger. We can't take Park Inn into Niger because there isn't an infrastructure. We're going to have to be the butcher, the baker, the candlestick maker in that hotel. So our back of house is going to be oversized to make the numbers work. We're going to need to have a full service, upper upscale hotel brand.
But Mike, you've managed to get Hilton Garden Inn into 5th place there, pretty much head to head with Park Inn. How do you agree that the physical model is wrong, or you're succeeding?
As Chris said on the previous panel, I think over time, Hilton Garden Inn will be the largest and strongest brand in Africa.
You just opened your first one, did you say?
We've opened 3 now.
3 now.
North Africa in Morocco.
Yeah.
We opened the first in Sub-Saharan in Nairobi Airport.
Right.
And just recently in Lusaka.
Okay,
So
but
Gaborone-
it's quite a big pipeline, isn't it?
16 to come at the moment. But I mean, I'm very happy with the stable of brands we've got for Africa. I think it's just right. I think Africa's not a level of maturity where you need 20 to 30 brands. We never have a problem fitting our brands to any opportunity that comes our way. And I see 4 core brands that you've got listed on there, less so with luxury. And I see our Hampton by Hilton growing over time. We're currently only focused on South Africa, and we're only going to focus on markets where we can really add scale. So I see Kenya, Nigeria, and Ghana following with Hampton, but when the time's right.
Okay. Let's change tack a little bit. The pipeline, the whole pipeline, you're measured on pipeline, and to some extent, the stock analysts who are looking at your share price will look at the pipeline and give it value, okay, when they're talking about a hotel chain's shares. So we did some analysis of the pipeline, and what we've done here is that we've looked at those deals in the pipeline that were signed between 2008 and 2013. 2008 is the oldest deal we've got. 2013 is 5 years ago. And what we're surmising here is that, well, shouldn't those hotels be open by now? I know, simplistic assumption, but play along. And what we found was that the blue line is numbers, but the key is in the red boxes there. That we found that 14% of Marriott's pipeline, 2,400 rooms, are pretty old. At the other end of the scale, Alexis, 30% of your pipeline, 3,000 rooms, is growing whiskers. Now, so the overall question is, does that have any value to your companies anymore? They're still just pieces of paper. Some of them are under construction, but boy, not going very well, are they? So Marriott, Karim, the fact is that all of those 2,400 rooms in your pipeline, 14%, they're all Starwood deals. They're all old deals that you bought.
From Starwood, is it?
Now, you didn't know that, did you? What are you going to do about it?
You should send me the numbers.
What are you going to do about it? For example, in Lagos, we have a 300 or 350 room hotel Meridian, which ain't going nowhere. And that was probably signed in about 2000. How much value to you does this pipeline have? Could we look at your pipeline and say, wow, you've got this huge, great pipeline, but when we start to analyze it,
If you remember, I started by saying the numbers I have is around 16,000. When we started first, you said 17,000 plus, right? Pipeline. So these are active projects, what we know. So out of maybe this 2,500, we have accounted at least maybe for 1,500 that will never happen. However, the rest, I would say active. I give an example, the Marriott in Accra that just opened. It took more than 10 years to build. You have to be patient. You have to understand the risk. The banks, everything in Africa, you cannot just click and say, I want a hotel built in 2-3 years, right? You have to be patient. If people already invested money, put their equity and they are halfway, you cannot just pull the plug and run away, right? You have to stay with them, help them find solutions and get there. You understand the risk in Africa. That's the most important thing.
Alexis, almost the same actually. You've got 3,000 rooms in the old pipeline, of which...
Can I blame Mövenpick or no?
Can you do what?
Can I blame Mövenpick or not?
You can blame all sorts of people, but you can particularly blame Fairmont.
No,
Fairmont Raffles Hotels International, which they took over a couple of years ago. And of your 3,000 old rooms there in your pipeline, 2,400 are in the Fairmont pipeline. And some of them are huge. They are monsters. A lot of them in North Africa. So again, the question is, what value do we place on that pipeline for you as a company?
The easy answer to that would be to say that I joined Accor in 2016, but I'm not sure that's going to be an acceptable answer. You know what? I fully agree with everything you were saying. I was actually surprised by the numbers because I was trying to think in my head what are these projects. There's a few I know that luckily will open. There's some of them where we know they're not going to open, and we write them off our books, and we don't disclose to the market these projects. We don't believe they will happen because, as you said, you're just over. We all know that most hotel operators. Share price and valuation is linked to the network growth. They actually look at network growth, including the churn. And of course, we very careful about disclosing the right information. So internally, I'm sure a lot of them have been cleaned within Accor. But the right answer to I think everything we've been saying is just the key initiative that Accor has been announcing earlier in the week and in July in the press is this proactive step we are taking by committing indirectly to a 1 billion capacity investment funds to Africa to address all these issues that have been presented and to make sure that whatever is going to be announced in the future will happen, will be delivered, and in the end will create value.
Thank you. Mike, in Hilton, some of your deals are quite old too, but I found out that a lot of the, if you say stalled deals, actually in North Africa, where the Arab Spring really brought a stop to investment, and a lot of projects were just stalled or didn't even start. North Africa, can you talk a little bit about North Africa in a few seconds?
A slow to realize pipeline is again the nature of the emerging markets. We take it seriously. We regularly review our pipeline. What we don't have is a pipe dream. If a project is not going to happen for whatever reason, we do terminate it.
You will clear out.
But we've got an inactive element, probably about 8% at the moment, and that might be inactive for a whole series of reasons.
Okay. There's no point cancelling the agreement just for the sake of it.
There is still some volatility, some political situations change. Typically, financing is still a challenge for a lot of projects. Where we generally believe the project's got value, we work hard at trying to resurrect that. So it's important for the investors, but I think the most important criteria is net unit growth, what you open, what is coming into your system, and that comes back to what I said earlier about the pipeline being realised.
And then, thanks, Mike. And then very quickly, Andrew, you've been actually quite good at clearing out your pipeline, but it's 21%, but in actual terms, it's the smallest. It's 1,620 rooms.
I think I've been
some
the
old
guy
deals
who's
What are you
been
going to
around
do?
since 2008.
Pardon?
I'm the guy who's been around since 2008.
Oh,
There's
right,
been some continuity in Radisson. So we also take our pipeline very seriously. We have a washout factor, and every quarter we would really review stuff that we really think there's really no chance, and we would then exit out of those hotel deals. But we try our level best to find solutions, and there's, as what Mike said, there's a number of reasons sometimes why the pipeline is stalled or stopped for a period of time, and it's sometimes even out of the owner's control sometimes. So
Well, it's very often not under your control. That's the point, isn't it? Yeah. With that, time's up. Thank you very much indeed, everybody, for your time.
Thank you.